various fears. Let's move on and let's put the spotlight on Canara HSBC. The company did come out with its operational update for the month of February, and there seems to be a strong set. But what's the way forward? What's the situation on ground? Let's understand more on that with Mr. Anuj Mathur, who is the Managing Director and Chief Executive Officer of Canara HSBC Life Insurance. A very good morning and thank you so much for your time, and a strong number and a strong growth you have delivered in February. How much of this growth came from the new policies versus the high ticket sizes? Firstly, help us understand that. And was the growth largely driven by ULIPs or non-linked products like protection and annuities?
So I like to cover slightly longer period because month-to-month comparison may not be appropriate. If we look at our long-term performance, which we announced in January, which was for 9 months ending 31st of December, we have seen very good growth. Our business has grown by close to 20% in terms of APE terms. So we are doing well. And January and February month performance also has been good. And we expect the year to end on a good note. The guidance which we gave while declaring our quarter results of 20% growth in our EP. We stick to that, and I think we should be able to deliver that growth. We are pretty confident.
Mr. Mathur, also let's deep dive into the kind of growth that you reported. Was this growth driven by new customer acquisition? Was it on account of higher ticket sizes? And how sustainable or strong is this growth momentum? And do you expect that to continue going forward as well?
Yeah, so this growth is actually driven by increase in penetration, which we are seeing in Banca. We are able to increase our branch productivity. We are able to increase activation in our branches. And ticket size more or less remains same. But yeah, this is driven by that. The other thing which I would like to mention is that we have seen good growth coming in the traditional business also. So that's our endeavor, that our traditional mix should be in the range of about 50 to 55%. And we are inching towards that. So the growth is all over. Like we are seeing good growth in number of policies also. We are seeing growth in traditional business. We are seeing growth in WPI. So overall, I think all these financial metrics are looking pretty robust.
All right, but how much of your February growth was driven by bancassurance channel with Canara Bank? And are you seeing stronger traction from the digital channels or agency distribution recently?
Right. No, we are seeing good growth, not just in Canara. Obviously, Canara is delivering that growth which I mentioned. HSBC is also delivering very good growth. And our other channels, which includes digital as well, as you rightly pointed out, they're all delivering good growth. But digital business as such in the industry is not very big as of now. So I think the growth which is going to come and is coming is from the banca segment. We launched our agency business in the month of October. And there also we have seen very good green shoots. We are seeing good performance. And I think overall we should end the year on a very positive note.
Okay, so you should end the year on a very positive note. That's the word coming in. But Mr. Mathur, life insurance industry growth moderated in the month of January but rebounded again in February. Do you see double-digit growth sustaining for FY27 as well? And what will the key demand drivers be for life insurance industry over the next 12 to 18 months?
Right. No, I think good question. Talking about the industry, we are seeing growth happening now. And my estimate is that industry will grow in the range of about 10 to 12%. I think the GST relaxation which happened is definitely helping in the protection business going up in new customer acquisitions. So all that is happening. And our estimate is that industry will grow in the range of 10 to 12%. And we have seen growth happening in the last 11 months. And I'll say that rather than looking at month on month, it's better to look at how overall growth is during the year. So if I talk about last 11 months, as of February end, the growth is pretty good in the industry. And we have also seen very good growth, which is likely to continue. There are various positive factors, as you rightly asked. One is this GST is helping the industry. Overall, we also see insurance awareness going up. I think the government has taken many initiatives in the past, which is now helping. And we are seeing traction coming from the customers' demand for insurance products going up. And obviously, as the financial services is doing well, insurance is also a beneficiary of it. And we are very optimistic about insurance sector growing in months to come and years to come.
All right, but with ULIPs contributing 61% of your product mix, how is this impacting your margins? Do you plan to increase the protection and annuity mix to improve long-term profitability?
So as I mentioned earlier also, we intend to end the year with traditional mix around 45% and ULIP going down to about 52 to 53%. So that's the guidance which we gave at the time of our quarterly results also. We are very much on track, and we see demand for traditional products going up. In fact, we have seen very good traction in protection. Our protection business, which used to be 4% previous year, if I talk about 9 months ending December 25, our protection business has gone up to 7%. So there is actually good growth in protection. Similarly, our annuity business also is seeing double digit kind of share. So our annuity is contributing roughly 13 to 14% of the overall business. And I think this is one segment which where we are very bullish. We are very positive about it. That retirement is one segment which is going to grow within life insurance. So overall, we expect our UL mix to be in the range of about 50 to 55%. Protection mix to be in the range of 7 to 8% and hitting double digit next year. And annuity business also in the range of about 12 to 15%.
Okay, so the outlook for future continues to remain very positive. Mr. Mathur, thank you so much for taking your time out and joining us here on ET Now. With that, it's a wrap. Thank you so much for tuning in.